testing, testing. ជារដ្ឋធម្មនុញ្ញធ្វើឲ្យប៉ះពាល់ដល់សន្តិភាពនិងស្មារតីជំនឿវប្បធម៌សង្គមកិច្ចការនៅក្នុងរដ្ឋធម្មនុញ្ញជាតិនិងសកម្មភាពរបស់បុគ្គលដែលត្រូវបានជាច្បាប់ទី2ត្រូវគោរពនិងអនុវត្តឲ្យបានជាប់ខ្លួនធម្មនុញ្ញវិទ្យាជីវៈក្នុងព័ត៌មានដែលជួយរដ្ឋមន្ត្រីនៃក្រមប្រព័ន្ធវិទ្យាជីវៈនិងជួយចូលរួមលុបបំបាត់ជនអធិនិយមដែលជ្រកក្រោមផ្លាកសារព័ត៌មានទី3ត្រូវបន្តចូលរួមយុទ្ធនាការប្រឆាំងព័ត៌មានខាងស្លាយដែលមានចរិតបំពុលសង្គមដែលអាចកើតចលាចលភាពវឹកវរបាត់បង់សណ្ដាប់ធ្នាប់សង្គមឬប៉ះពាល់ដល់សេដ្ឋកិច្ចជាតិនិងត្រូវចូលរួមថែរក្សាសុខសន្តិភាពការអភិវឌ្ឍប្រទេសជាតិទី4ត្រូវបន្តជំរុញសមត្ថភាពជំនាញវិជ្ជាជីវៈនិងវិជ្ជាជីវៈទី4ត្រូវបន្តជំរុញសមត្ថភាពជំនាញបច្ចេកទេសនិងវិជ្ជាជីវៈជាពិសេសធ្វើអក្សរកម្មឌីជីថលអក្សរកម្មព័ត៌មាននិងប្រព័ន្ធផ្សព្វផ្សាយដើម្បីលើកកម្ពស់គុណភាពព័ត៌មានសម្រាប់ផ្នែកព័ត៌មានសុវត្ថិភាពព័ត៌មាននិងសកម្មភាពស្ថាប័នសារព័ត៌មានក៏ដូចជាកសាងជំនឿទុកចិត្តតាមតែខ្លាំងរបស់ប្រជាពលរដ្ឋលើសារព័ត៌មានជាទីបញ្ចប់ក្នុងនាមរាជរដ្ឋាភិបាលកម្ពុជានឹងសូមថ្លែងនូវការកោតសរសើរនិងវិតម្លៃខ្ពស់ចំពោះការចូលរួមចំណែករបស់ស្ថាប័នព័ត៌មាននិងបងប្អូនអ្នកសារព័ត៌មានអ្នកផលិតមាតិកាតាមបណ្ដាញទំនាក់ទំនងសង្គមនិងអ្នកប្រកបអាជីពក្នុងវិស័យព័ត៌មាននិងសារព័ត៌ក្នុងការធានាបាននូវសិទ្ធិទទួលព័ត៌មានរបស់ពលរដ្ឋខ្ញុំសូមជូនពរបងប្អូនអ្នកសារព័ត៌មានទាំងអស់សូមប្រកបដោយពុទ្ធធម៌ទាំង4ប្រការគឺអាយុវណ្ណៈសុខៈនិងពលៈ8គ្មានជាឡើយហើយប្រព័ន្ធអង្គការអធិការឆ្នាំមហាសព្ទសាស្ត្រពុទ្ធសករាជ2568ឬពុទ្ធនិក7នៅទី1នៃឧបទាឆ្នាំ2025នាយករដ្ឋមន្ត្រីអ្នកផ្លេចជំនាញសម្បត្តិស្នងការបវរសក្តីគុណណាស់តាមនេះគឺជាចំតាមនៃអង្គការរបស់ប្រមុខរាជរដ្ឋាភិបាលកម្ពុជាក្នុងការជាប្រធានសារព័ត៌មានពិសេសលើពីផងទី3ទី3 Bantu lah. Min benar-benar mau. And let's see. Min. Okay. Okay, ở đây cái này share cũng theo ấy, tam khối. Chân ngày đang như này, QI, yeah. How to calculate tax on incomes. Okay, this is final questions. June 2022. Yeah. No, June 2023. Okay. Yeah, as you can see, there's the final exam paper. So there's some instructions. We have question 1's all about multiple choice questions. Question 1, we have 15 multiple choice questions. And then question 2's still multiple choice questions, 15, but a different format. There are some calculations. Question 1 related to theory, but question 2 involves some theory plus calculation. Then question 3 all about tax on income. Okay, all about tax on incomes. Question 4, yeah, this is all about writing answer. And question 5 the same. So yeah, question 4 and question 1 we will get like 30 points because you get 2 each of MCQ. And question 2 we get the same points, 30. And question 3 we will get 20s. Okay, they put the point here, 20s. Question 4, 10s, 5, 10s. Okay, but we don't do question 1 and 2, 4 and 5. We only, work on question 3, which is tax on income. Okay, did you get the file or not yet? Just got a file. Okay, okay, open that files, and then if you have more questions, you got only question 3 or all questions? Okay, then we'll do a question 3 only. So question 1 and 2, you can do it at home if you want to try, if you have times. Okay, practice, make you perfect. Okay, so as you can see, okay, question 3, this side, if you look at the left-hand side, this is a questions which they provide a little background about the companies, what they are doing, and which financial years. Down below, we have what we call income statements and balance sheets. Okay, so yeah, in order to do a tax on incomes calculation, what we need is income statement and balance sheet mainly. We don't need cash flow. We don't need, what we call a statement of change of owner equity. We don't need that. Next, what we need is some explanation on,
some accounts which lead to tax adjustments. Remember step 1, right? We cover A, B, C, D, section A, section B, section C, and section D. All of these notes will involve with the adjustment related to the step 1. Yeah, related to step 1, which, mainly related to step 1. So as you can see, the notes, most of the note will on the income statement side because it's involved with, expense adjustment or income adjustments. Okay, yeah, you can come closer. You cannot see, right? But you have the file, right? Okay, yeah. Okay, and a few statements. As this question, we have around 18 notes, but note number 2 divided into like 4 different notes. Some notes we need adjustment, some notes we don't need to. The note that did adjustment, we will work on it. The notes that don't need adjustment, then what we're supposed to do with it. Okay. Okay. As you can see, if you can analyze correctly, each note you will normally get 0.5 points. Okay, if it is around 18 plus 3, 21, then you will get around 10s. Yeah, 10s point. Okay, 10s point, as I said, it's cover step 1, which divide into section A, section B, section C, and section D. Okay, so now I believe you know how to read this, perfectly. Yeah, income statement and balance sheet. Okay, you are a trained accountant. Yeah. Okay, then you will have a notes. Like we have note 1s. Okay. Mainly involved with the you look at it, note 1 involved with cost of sale. Okay, cost of sales, yeah, would involve with maybe adjusted incomes. Yeah, sometimes as you can see, note 1 here, what they are saying. December 2022, TGL had a Christmas promotion and offered the products with a total selling price of 14,400 free of charge to the customers. Okay. The 12,000 US dollars total cost of these products was recorded in the cost of sale accounts. For the accounting purpose, TGL didn't recognize or record any income from these free goods in their accounting books. Okay, yeah, something like that. Okay. Yeah, of course, free good accounting are not required to record incomes, but of course, you take from the inventory, provide free to the customers. Of course, you have to write off to the cost of sale, right? Okay, so this. Yeah, the note will explain, each account, what is the problem, whether you need an adjustment. Okay. And next is balance sheet, which we do have some balance sheet items. We normally have some note with respect to the maybe, as you can see here, note 16 involved with what we call inventory write-off. Okay. Yeah, here, note 16 here. It's very pretty. We will run through all the notes, but I'm just trying to explain you on how the question normally have during the final exam. Okay, so, and this is the question. We have note, all the note we have, and down below, we're going to have what we call other informations that you are required to have in order to calculate tax on income. So such as here, A, below is the tax depreciation. This is the tax, the tax depreciation schedule they provide to us. This is last year tax depreciation, as you can see. Okay, they have an type of asset, office equipment and furniture and cars, computer and electronics device. Then they have information about historical costs, depreciation in year 2021, what they call tax written down value, at the end of year 2021. And then they have information about new purchase in 2022. Okay. So now you have to, trying to identify, the asset, whether this asset fall under which class. Then you know what is the depreciation rate is, and you know how to depreciate, right? And then we have also other information related to the, some information about, I think this is asset disposal. After selling old pickup car during December 2022, TGL bought a new van 15 seat for 56,000, exclusive of VAT, which will be ready for internal use from January 2023 onward. They bought here, as you can see, they bought a new car in 2022, but it is not ready for use in 2022. We're going to use in January 2023. So this is the information that provide to you whether we need to include this asset in the depreciations or not. And then some information related to the what we call TGL is a company name, capitalization of asset for accounting follow tax regulation on cost of asset recognition. Just they said, the 56, all the asset recorded here is a cost. So if it is cost, it follow tax rule, right? Not revaluation. Maybe if they say, oh yeah, the recognition of asset is based on accounting and revaluation, then they will provide more information to you. Okay, the history cost will be this much, this amount will be, after they revalue the asset or something like that. But this is based on cost price. You don't need to do anything. All expenses and incomes excluded VAT and other applicable taxes unless otherwise specified. Or because income and expense not supposed to include VAT or maybe other taxes. That's fine. It's correct. TGL received confirmation from the GDT that it maintains proper accounting record for year 2022. So what it is about. If the company maintains proper accounting records, it means the company will be exempt from minimum tax. Right? The company, we learned this week, the company will subject to one of the two final tax. Number one is tax on income, 20% on net profit, or 1% of turnovers, right? Which one is higher, you will pay that one. But if you recognized by the GDT that you are maintain proper accounting record, then you are exempt from minimum tax. So what does it mean? It means you only required to pay 20% income tax. So you don't need to compare 20% on net profit and 1% on turnover anymore because you are exempted. So whatever 20% on net, you pay that one. If you don't make money, you lost, you don't pay tax. If you make money or you make profit, then you pay. You don't need to compare. So, and to apply this, it means we don't need to calculate minimum tax, which is we don't need to calculate 1% on turnover. We don't need to do that. We don't need a comparison number. So then after we calculate, 20% tax on income, this is our final tax. And then we try to claim a deduction of other tax credit. So then we'll down to here, we can see TGL paid a total of 15,350 to the GDT for TOI prepayment in 2022. So this, what is this about? This is a prepayment of income tax. So this is a tax credit that you can use to offset with your income tax liabilities. Yeah. And okay, information about last year tax return, what they call TGL Lodge 2021 TOI return show. Okay, a tax loss carry forward of 150,000. Yeah. Look at it. The Lodge tax returns, the company making loss last year, 150. So the loss carry forward, which is recorded in the tax return, is allowed to claim as deduction in year 2022. Yeah, that's a rule, right? Yeah. And then they also have what they call unutilized interest carry forward. Aha. Yeah, they're making loss last year. They cannot claim a lot of interest expense, right? So then they cannot utilize all of it. Then they can carry forward. They carry including loss plus interest. Okay, so this interest carry forward can be used to offset with 2022 tax on income. If our maximum calculation exceeds, can cover this carry forward interest expenses. Last one, this is all tax prepayments of 6,300 in TOI credit carry forward. Okay, because they're making loss last year and the company don't exempt from minimum tax, and they don't pay income tax, and that's why their prepayment of income tax can also be carried forward to offset with future tax years. So now you can have tax credit, prepayment of income tax for the current years. You also have a prepayment of income tax from last year's. That's tax credit. We have withholding tax credit. I believe withholding tax credit may be in the note. Okay, so before you do before you answer the question, spend time to run through all of this question first. Run through in detail. But before the exam, they will give you 15 minutes to read. Please spend 15 minutes read. Read the questions. Don't try to start doing immediately. Some students, they want to save times, and they don't read. They start doing immediately. When you start doing immediately, it's not a good strategy to do it ACCA question. You have to read it. Because as you can see, some question you will see that yes, pretty easy. Some question, it is difficult. When you just read it, some question, answer straight away. And you read it, some question, maybe you have no idea. Okay, then you can put a note, let's say, like a note, this question, I don't know, this one easy, but don't do it. Even though it's easy, don't answer. Go through, spend 15 minutes, run through whole exam questions. And then trying to identify the easy one. Okay, when you start, answer the easiest question, the question that you actually know. Try to answer all of them, and then go back, to the question maybe not very difficult, but need time to analyze and need time to think about it. Okay. Okay, for TOI, yeah, we need to run through it. You see quite a lot of very long questions, but yeah, you cannot skip it. And the right side, they will provide you like this. This is what we call answer sheet. Okay. Yes, answer sheet here. You have to answer all, here. And the answer is follow the spreadsheet, the format that I, show you, this week. Show you this week, okay? You have a blank answer sheet here. All you need is to write it down and trying to do calculation. So you got this file? You have it? Download, okay, good. Okay, now, I think this is not your exam, but, class. And I don't run through it first. We will run through and try to analyze answer. Okay, but I just explain you how's the question look like. This is the final question, June 2023. Okay. Okay, in order to calculate TOI, the first thing you need to do here, the first thing you need to write it here. What is it? Look at the spreadsheet, during in the lecture note. TOI 5, right? You have it? The lecture note. Have a lecture note. You will start with lecture note. Yeah, start with. Yeah. Start with. Yeah, net profit or loss from accountings. That is first, the first thing you need to do, you have to write, you start with net profit or loss accounting. Profit or loss before tax. Okay. And then you need to write the, like, if it is profit, you put like a negative number. And if it's loss, then you put like a negative. So where we get this number from? From income statements. This is accounting. So how much the company profit before tax? How much is it? 263,200. 263,200. Okay, this is profit. The company making profit. As you can see, there's positive numbers. So it make profit. Okay, this is the number that we put here. Yeah, we put it here. It's profit, it's positive. 236,200. Okay. So if you just write down like this, you will get 0.5. You will get points, 0.5 points. Okay. Next. What you're supposed to do? Step 1, right? Remember, 8 bags, non-deductible expense. You say 8 here. And then 8 back all non-deductible expense. Okay. Where we get it, the non-deductible expense from? Where we get it from? We get it from information in the income statements. We get it from here. But if you just look here, if you run through this is okay. This is revenue and cost of sale, gross profit, other income. Okay, this is cost of sale with related to the commissions, marketings. If you just read this description of account, cannot tell you anything, right? Cannot tell you whether it's deductible or non-deductible, even though you remember all, the deductible, which is what they call, all of those expenses. But one thing, in our lecture notes that you can pick it up easily is that accounting depreciations. Okay, as I said, accounting depreciation is not a tax deduction. You need to add back all amounts. So where is the accounting depreciation? Here. So then we have to add back all accounting depreciation here, 63,050. Okay. Put it straight away. Yeah. And back here, counting depreciation, which is 63,505. Okay. When we add back, we put a positive numbers. Okay. If you do this, you will get 0.5. Okay. If you run through the the list of non-deductible expense, the next going to be what we call provision. That's the orders, but we don't need to, when you do the answer, you don't need to follow that order. What you need to follow, you have to run through the P&L and try to identify each expense, deductible or non-deductible, by reading the note here. Okay, all note here, because the note will provide you more information about the accounts. What happened with this account? Okay, let's go through the note here. Okay. Can you read it? Because I think you have the file, right? Read and try to tell me what we're supposed to do with this note. What kinds of adjustment we need to do. Okay. Now we work together. Okay. I give you a chance, read it, analyze, and tell me what kind of adjustment we need to do. Does this not related to the adjustment of the expense? Yeah. Okay, I forgot to ask you, what is the company doing? What is the business of these companies? Yeah, duty-free shop. They are selling products. So it's trading companies, higher trading companies. Yeah. Okay. Okay. It is trading companies. It's selling goods. Do you know duty-free shop? Yeah. Okay. Good. The shops selling a product without paying tax. They normally sell at the airport, or maybe what they call at the special zones, right? The Naga, right? The local day. Have you ever been there? No, only gambler. You are good students, not supposed to be there. And you are Khmer, you are not allowed to do a gambling. Yeah, it's illegal. It's a criminal offenses if you gambling. Only foreigner allowed to do a gambling. No. Yeah. យើងខ្មែរគេអត់ឲ្យលេងទេប៉ុន្តែខ្មែរអ្នកមានយើងលួចទៅលេងបានអូខេសោកលុយប៉ូលីសទៅលេងប៉ុន្តែក្នុងច្បាប់ក្រមព្រហ្មទណ្ឌយើងជនជាតិខ្មែរអត់អនុញ្ញាតឲ្យលេងល្បែងអូខេយើងចេញទៅលេងប្រទេសក្រៅបានប៉ុន្តែយើងសម្រាប់បងល្បែងស្រុកយើងអនុញ្ញាតឲ្យជនបរទេសហើយជនបរទេសឈ្នះអត់មានជាប់ពន្ធទេប៉ុន្តែក្រុមហ៊ុនកាស៊ីណូគឺត្រូវបង់ពន្ធពីមុនមកគាត់អត់បង់ពន្ធបង់ទៅពន្ធតិចបំផុតឥឡូវយើងយកពន្ធច្រើន Okay, come back to our question. one note, during exams, okay, now you can spend more times, but during exam, you're supposed to spend, if it is 0.5 mark, 0.5 points, so you need to spend not more than 1 minute to analyze one note. If you spend more than that, cannot finish the question. Okay. Can anyone tell me what change? What kind of adjustment we have, or we don't need to do anything? Or it is related to the adjustment of expense or not? Yeah, note 1, they try to explain the cost of sale recorded in cost of goods sold, but that's cost of sale recorded related to free goods. They provide to the customers. They provide the inventory to the customer for free, maybe for Christmas promotions. Yeah, as you can see, you go to the store during Christmas, New Year's. Yeah, okay, if you buy one product, you will get some additional product for free, right? Yeah, some store they provide that. In realities, we have the same transaction. So if you provide free goods to the customers, from accountings, yeah, you have to record, the cost of product in the cost of sales, right? Because you provide free free from the inventory free, but there's no income recorded. Yeah, it's free. How about tax? The taxman happy? Will the taxman happy? No, if they don't happy, yeah, what are they supposed to do? Huh? Hmm. As you can see, if they sell the goods, they will get 14,400. Okay, but they get nothing. And then they record cost of goods sold of 12,000 in the cost of goods sold accounts. So it means we need to adjust income. But yeah, in step 1, adjust income under section B, right? Section B, right? Section A, add back all expense. So it means note number 1, we're going to adjust, but we don't adjust in section A, but we will adjust in section B. The section we call taxable income not recorded. Okay. So, but now we work on section A, which is add back all non-deductible expense. So, okay, we'll skip, we don't do adjustment, but we run through it, we remember it. Okay, when we finish section A, then we will adjust this one. Okay. Next, we look at note 2. Where we get it from? Here, note 2 is the note related to other income. So we have 2A, 2B, 2C, and 2D. We have 4 different notes. Okay. Then here, note 2. So in addition to the main incomes generated from product sales, TGL earns the following other income. Okay, 2A. Okay, read it and tell me what we're supposed to do with this. This note will have this note in every questions. Do you know what to do? It's not just telling you how the company recorded interest income, right? If you just say, hey, you got interest income, then you know how to record it. You know, debit cash, credit income. Okay. Okay, that's for accounting. But for tax, as you can see, they telling you receive interest income, but the cash you receive in your bank's account is a net income, which the banks already deducts withholding tax 6%. 6%. Okay. But of course, as based on accounting rule, you know, and tax rule, you are required to record not a net income, you know, not income after tax, but income before tax. So in your income statement, you record gross, which means income inclusive of 6% withholding tax. And then you record what we call a separate account, what we call withholding tax credit of 12,000. So because remember, we are a registered company, we are allowed to claim withholding tax, you know, credit, right? If we generate income and, you know, the customer deducts the the withholding tax from our income, we can claim this as a tax credit. Okay. And that's why they tell us, okay, now you can see you have a withholding tax credit of 1,200. So how did it record here? That's important because some company, they wrongly record. So you must record total interest income is a cross. If you calculate, you know, 20,000 interest income cross, 20,000 multiplied by 6%, you will get 1,200, right? 1,200, which you recorded here. Tax credit, 1,200 in receivable accounts in the balance sheet. But some company, but how much cash they receive? They don't receive 20,000. They will receive 20,000 minus 1,200. So it's maybe 18,800. Yeah. So that's the cash received in the banks, right? Okay. Some company, they will record here interest income, not 20,000, but 18,800. Okay. That is wrong. That is wrong. Based on the withholding tax rule, as I already explained to you, you know, the incomes on the contract is a income that you receive in the bank is a net, if that income subject to withholding tax. So based on that rule, you must record a gross amount, which is, you know, 20,000. Okay. So based on this note telling you that you can claim a withholding tax credit. Remember, last step, right? Last step, you deduct, you know, when you can calculate how much the tax liability, you deduct withholding tax credit, you deduct prepayment of income tax, and you know how much additional tax payment you need to pay to the GDT at the times. Okay, so we don't need to do any adjustment with respect to this note. Okay, this note just telling us how much credit we have, how we record. But if the question say that the company, you know, let's say, okay, the company will receive, you know, an additional interest income, you know, after the withholding tax, but the company record net, which means they don't record 20,000, they record only 18,800 here. So this case, you need to do adjustments, right? Because the company record wrong. You know, they are not supposed to record 18,800 as I just mentioned. They're supposed to record 20,000 gross income. So then you need to add back 1,200. But add back under section B. Taxable income not recorded because they forget to record in the accounting book. Yeah. Based on accounting, maybe you okay, right? Accounting say, hey, I only get money 18,800. Yeah, this is my income. I record this. You know, your debit and credit is balanced. Is right. Cash in the banks 18,800. Yeah, I record income the same amounts. I don't record credit. Fine. Balance sheet is balanced. Yeah. But from tax perspective, it's not the right record. So then you need to add back. But now they told you will record in cross. Then no adjustment required. Okay, next move on to the 2B. Okay. Look at this. You don't have a file? Okay, okay. Yeah. You can discuss. Okay, fine, no problems. You know, you can discuss and give me if you can give me the right answer, yeah, I will appreciate you. You know, no reward on for the right answer. Yeah. The reward I can get maybe additional point, but I'm not allowed to do so. 100%, you know, points, or at the final exam. Okay. Okay. Do we need what we need to do with this note? Do we need to do any adjustments? Okay. When we study in the last couple of weeks, it seemed easy. But when the question, it seemed like, what is that? As you can see, some note, you don't need to do any adjustment, but they just provide additional information. Yeah. Based on 2A, they tell you have withholding tax credit. You know, that's additional information. But 2B, what is this about? It's about, you know, like damage, we return, and then they replace with the different products because they don't have the same products. Like this is in realities, yeah. If you have a guarantee sale, yeah, this is kind of a guarantee sale, right? You say, hey, my product is so good, you know, it's good. If you find out it's not good or damaged, return to me. I will give you new product, give you a new products. But the supplier doesn't have the same products, you know. Of course, they replace with a new product. If you replace, it means the supplier violate the contract. violate the warranty condition. If you violate the contract, normally, you have to compensate, even though the product is the same price. But, that's how you sign what we call sale purchase agreement. That's that is all about. Okay, so based on this, supplier cannot find the same product. They replace with a new product. But of course, they violate the contract. They are required to pay compensation. So the compensations of 15,000. Good. At this point, the compensation of 15,000, the company record as other income, right? Other income. Here. The company record as other income. Is this correct? Based on accountings? Yes, right? You get money. Yeah. Compensation is other income. Okay. If the accounting say yes, this is other income of a company. What about tax law? Does this income subject to tax or not subject to tax? This is the point that you need to analyze. Right? Because we learn about the principle of income. Some income was subject to tax, some income not subject to tax. Right? And some income not recorded based on note 1, accounting no record. But say, hey, tax say no, this is taxable income. Okay, and this note, what we need to do to analyze whether this additional income is taxable, because as you can see, when we return the products, they give you back the same product with the same price, but they give you additional compensation. Accounting record as income. How about tax? Taxable? If it's taxable, okay, fine. We don't need to do adjustment, right? If it is not taxable, then you claim as a deduction in section D, right? Income recorded but not taxable. Okay. Now, this compensation income, taxable or not taxable based on tax law? It is? It is non-taxable. Are you sure? Okay. Accounting, you can see that, income only two types of income. Income from sale and other, right? But tax, we have 3 different types of income. We have income from main business, subsidiary, and other, right? Okay. When we learn about income, we ran through, income from sale income, subsidiary income, and other income. And then we have a list of other income. I think, if you still remember, we learned about other income, which is income from compensation, other taxable income, including income from compensation, income from insurance, whatever. So go back to read your, lecture note or maybe lessons. You can see compensation incomes is a taxable income. Some country may not tax, Same like America, in the United States now, they don't tax on tips. They don't tax on. Some will say compensation from insurance or compensation from breach of contract. So this is not compensation from insurance, but this is in compensation from breach of contracts. The supplier breach of contract. So this is the taxable income. Okay, you can go back and review it. The taxable income. It is a taxable income, and we already record in the accounting book. So do we need to do adjustment? No, right? No. Okay. So, but this note provided to you just to steal your times. Okay, if you don't read the lessons, you don't know, and then you will wonder, hey, each note will, teachers always tell me that each note, if I analyze correctly, I will get 0.5. But I don't know what I'm supposed to do here. So, and then you don't remember whether it's taxable or not taxable, or then you don't know how to do it, to deal with it. whether you need to adjust or not, don't need to adjust. And this note gonna buy you a lot of times. It's gonna burn your times because, you know, if you don't know the lesson. Okay, if you know, okay, taxable income, just run through it quickly. Taxable income, move on. Okay, fine. Okay, now it is taxable income, no adjustment. Okay, next, read note 2.2c. Okay, we dispose of asset. Yeah, as you can see, note 2, we dispose of the asset, which is car, and we record a loss, right? A loss of 15,000. Loss of 15,000 here. The loss on disposal of asset. What will happen? We talk about it, we learn about it on Wednesday, right? Wednesday. If not Wednesday or Saturdays last week. Loss on disposable asset, deductible or not deductible? We record loss. Yeah, we record loss of when we dispose asset per accounting. Is deductible or not deductible? Look at a list of non-deductible expense. Yeah. Deductible or not deductible? That, yeah. That's why I asked you, if you look at the lecture notes, you can see a list of non-deductible in section A, including loss on dispose of accounting, per accounting. So then we add back. Okay, now we add back. Okay, and then we add back here. So the loss of disposal of a loss on disposal of the asset, we add back here. We add back 1.5, 15,000. Okay. When you do this, you will get another 0.5. Okay, now you get 1.5 points. Question? If you remember all the the non-deductible expense, then you can do it quickly. Okay, we add back. Are you okay? Yeah. Then move on to the next note. Okay. Now we have the to A, to B, to C, and then to D. What is it? Said this is what it's about. Currency translations. Teacher has unrealized exchange gains of 5,000. Hey. What happens? Currency translation is mean, exchange. Yeah. If they record unrealized gain, for accounting, yes, rely on unrealized, they must record, right? But from tax, unrealized gain. And then you record as income in your accounting book and accounting record. So whether this income taxable or non-taxable. If we're talking about income, we're talking about whether it's taxable or non-taxable. It is non-taxable because it is unrealized income. So if it is unrealized income and we include in the accounting record, what we need to do adjustment is we deduct in section D, income recorded but not taxable. Okay. Income recorded but not taxable. Everyone follow me? Yeah. Okay. We don't add back in the section A. Okay, but we will do it. We claim as deduction because it's not taxable income in section D. Okay, now we move on to a next note, which note number 3, related to note number 3 here related to cost of sale, which is commissions for tour, commission expense and marketing and promotions. Okay, so this is all about expense. Run through it now. Okay. Yeah, each note is, it's some note is short, some note is long. But I believe in you. You can read English very fast, faster than reading Khmer. Is it true? Huh? And Anglais lươn gì Khmer? Hả? Anh Khmer lươn gì? Okay. Riêng Anglais buôn bay lần duឆ្នាំấy anh Khmer lươn gì? Nhưng mà chẳng biết này thà lọ chừng nhom Nga bên nhom anh Khmer bên ប្រកប bự mà chứ đó. Còn đây là Anglais nó perfect អត់ ដូចនេះ ចុងក្រោយភាសាអីក៏អត់ Okay. You check Anglais phong check Khmer. Yes, you are the best. Okay. But and when they use reading slow យល់ជាងដូចជាជំនាញទៅ repeat. Ở đây bị slow, reading slow ជាង ចង់និយាយថាយើងនិយាយអានទៅ reading យឺត ពេលខ្លះពាក្យខ្លះដូចមានអារម្មណ៍ថាអត់ដូចអត់ឃើញអត់ឃើញ អត់សូវអាន ហើយពាក្យខ្លះចំណែកអានខ្មែរទៅអត់យល់ដូចអញ្ចឹងទៅបកទៅអានអង់គ្លេសវិញមិនយល់ ប៉ុន្តែបើយើងអានយល់ទាំងពីរច្បាស់ perfect លឿនដូចគ្នា Okay, អញ្ចឹងមានថា productivity របស់យើងលឿន Okay, មិនដែរ What happens?បញ្ហាមកវាកន្លែងធ្វើការភាគច្រើនវាអត់សូវបានប្រើពាក្យបច្ចេកទេសខ្មែរយើងប្រើពាក្យទូទៅមកយើងនិយាយអូខេធម្មតា miền trên chơi đây blog máy của bạn và về ăn cho luôn cho bạn trong ăn cho đôi khi cho bạn ăn chứ nó ví dụ chạy nó là trong như ví nhưng dưới tướng như technical chạy tê để cho dân ăn được việc và ví dụ càng nhiều nào muối slow như tôiយកអត់សូវប្រើនៅក្នុង accounting tax វិញខ្ញុំអានខ្មែរ very slow មិនណា slow ជាងអានអង់គ្លេសអង់គ្លេសយើងអូខេយ៉ាងឯងព្រោះថាពេលយើង communicate ជាមួយ client ទៅយើងភាគច្រើនវាសិតតែណែបងនេះតែអញ្ចឹងយើងយល់ពីពួកនឹងច្រើនជាងហើយពាក្យថ្មីខ្មែរទៀតអានទៅកាន់អត់យល់បណ្ដោយប៉ុន្តែបើយើងអានកន្លែងខ្លះអង់គ្លេសអត់យល់វិញយើងទៅមើលខ្មែរវិញប៉ុន្តែមើលពិនិត្យម្ដងហើយម្ដងទៀតម្ដងហើយម្ដងទៀតអូខេ to confirm the meaning អូខេតបមកយើងនេះវិញមិនដែរនេះនៃកាត់ឡើង what happens okay normal right reality is the same you know like because duty-free shop mainly focus on tourists you know customer there's a main customer is a tourist is a you know like a foreign because as a Cambodian we cannot buy duty-free goods we have to buy the good fully pay duties that's why they contact with tour agents by offering a commissions if you bring more customers you know tourist customer and they buy $100 you will get commissions yeah that is a contract so of course the tour agent bring the customer in and they buy it they get commission but all other commission they said well documented except 1,200 where accountant lost supporting documents it's lazy accountants okay cannot find document but accountant can still remember hey I have some document pay 1,200 to the two agents you only have like a cash transfer that like I told you before right it's not just based on the question but reality is the same sometimes you transfer the money to the customers through banks but you lost invoice you lost contract yeah that can happen so what will happen if this expense the expense you recorded but no supporting document if we're talking about expense we're talking deductible or not deductible if it is deductible we don't need to adjust we don't need to add back but if not deductible if it's non-deductible what we need to do is deductible or non-deductible okay why is deductible why because of nature of expense yes if we're talking about natures commission is a direct expense right because it's really related to the sale that is direct to really related to the business yeah as a nature of expense is deductible but in order to deduct do you remember you need to meet how many conditions how many right in nature the nature of expense yes you can is allowed for deduction but just based on the nature alone not enough you need to meet 3 conditions okay I repeat again first what is first condition bên sai yeah must be supported by supporting document and second, yeah, economic performance. Of course, economic performance happen, right? Because the two agents bring in, the customer buy, actually they get commission. Yeah, economic performance fulfilled. The third one, yeah, again, they said always talking about document or something like. But here they said, well, except this 1,200, which accounting lost document. So yeah, economic performance fulfilled, but we don't have supporting document. If no supporting document, no invoice, no evidence that we paying commission, what will happen? Which means we don't fulfill three conditions. So if you don't fulfill three conditions, can be deducted? No, cannot be deducted. And if cannot be deducted, you add back, right? And then you add back. Okay, 1,200. Okay, now you have three add backs. Okay, because the commissions recorded, the commission of 1,200 recorded in the total commission account have no supporting document. Okay, so but total commission is not 1,200. Total commission is 20,000, but amongst that 1,200 is not doesn't have supporting document. Then we add back only 1,200. So the rest is deductible. Okay, move on to 2B. Yes, 3Bs, not 2B, 3B. Please spend time reading it and think about it. If you don't know it yet, it's okay. This is just the beginnings, right? It's the beginning. Don't need to worry too much. Okay. No need to feel pressure now. Okay. But what I want you to do is keep learning, you know, keep analyzing, keep thinking and reading. Include accounting គឺ record 20000ហ្នឹងគឺ include ទាំងអា1200ហ្នឹងដូចគ្នាប៉ុន្តែគ្រាន់តែអា18000គេមានឯកសារចំណែកគេមានអីគេអា voucher ទទួលលុយមានគឺថាពីព្រោះបើសិនក្នុងករណីថាពួក commission អញ្ចឹងធ្វើអញ្ចឹងគេទៅមានឯកសារអីគេតែពិតពួកគាត់អត់ចេញ invoice ទេអញ្ចឹងគាត់នឹងនាំភ្ញៀវមកប្រហែល10នាក់អញ្ចឹងគាត់នឹងមើលឲ្យពេលភ្ញៀវទិញគាត់នឹងមាន receipt ចង់និយាយ invoice receipt របស់ភ្ញៀវទិញណាក្នុងនោះគេដាក់ថាបើសិនយើងទិញត្រឹម$100នឹងបាន commission បើទិញក្រោម$100អត់បានទេមិនអញ្ចឹងអញ្ចឹងជាទូទៅយើងធ្លាប់ទៅ tour ដែរហ្នឹងហើយពេល tour គេមិននាំទៅកន្លែងទិញអីវ៉ៃវ៉ាន់ទៅទៅស្រុកគេស្រុកយើងឲ្យដូចគ្នាតើអញ្ចឹងពេលដែលទិញហើយគេមកសួរយើងឯងទិញបានខ្ញុំសុំមើល receipt អញ្ចឹងណាអញ្ចឹងគេទៅពេលហ្នឹងគេរត់ទៅវឹងទៅកន្លែង cashier អូខ្ញុំមាននាំភ្ញៀវរបស់ខ្ញុំ1 2 3 4 5គាត់ទិញតម្លៃប៉ុណ្ណេះអញ្ចឹងខ្ញុំត្រូវបាន commission អ្នកឯងមើលឃើញអត់អូខេអញ្ចឹងធ្វើ cross check តោះមកគេមានដូចថារបៀបដូចឯកសារមួយពាក់ព័ន្ធជាមួយនឹង list របស់ customer ដែលទិញហើយ commission ត្រូវបានមែនអញ្ចឹងអាហ្នឹងគឺភាគីទាំងសងខាងសញ្ញេទទួល commission ទទួលបានមែនអញ្ចឹងអាហ្នឹងវាប្រៀបដូចជា invoice អញ្ចឹងអូខេតោះមកគេ transfer លុយឲ្យយើងប្រហែលជាបាត់អានោះអញ្ចឹង20000ហ្នឹងវា include 1200ហ្នឹងដូចគ្នាយល់ទេព្រោះ account នៅក្នុង account របស់យើងពេលព្រាមនេះយើងមានឯកសារប៉ុន្តែពេលដែលចប់ថ្ងៃរៀបចុះរៀបឡើងវាជ្រុះបាត់អាមួយហ្នឹងហ្នឹងណា yeah yeah ប៉ុន្តែសួរថាយើងអាច record ដកចេញឲ្យ 1000 ដកបានលុះត្រាតែ cashier ឬ accountant ហ្នឹងដាក់លុយខ្លួនឯង 1200 ទៅវិញហ្នឹងបានវា balance ទេ yeah Hello 3B okay so this is related to expense which is marketing and promotion so we record here yeah incur 5,000 promotions expenses so promotion expense we call marketing and promotion expense accounts but that promotion and marketing yeah what we spend we provide as a coupon vouchers to the customer who buy the product provide to who okay customer yeah customers who are introduced by two agents and they provide to the customer maybe at the airport right maybe restaurant partners they okay the two agent will get commissions but the customer will also get some gift I think this is like a gift you know when you buy up to one for two agents if the customer buy 100 they get commission but at the same time the customer if they buy up to 1,000 and or more they will get what we call a coupons gift you know to can enjoy food with their restaurant partners okay so you got a coupons you go to restaurant you don't need to pay cash you just you know hand over the coupon then you can eat you can get a meal I believe you to have this right you to have a coupon right you buy maybe and then maybe Lucky Supermarket or whatever other place you know you buy up to the certain amounts then you will give a coupon hey I give you a coupon okay you can go and you know enjoy your meal in that restaurant that's a partnership so when you get a meal you don't need to pay you pay as a coupon so how the restaurant get the money when they get a coupon they will inform TGL say hey now your customer come to my restaurant okay I got 500 coupons yeah each coupon cost a value at $10 please pay me back 5,000 okay TGL will pay on behalf of the customers yeah and that's why they record as a promotion expense 5,000 the question is this 5,000 marketing and promotion expense deductible or non-deductible based on this arrangement if it's deductible we don't need to adjust right if it is non-deductible of course we need to add back so as you can see they record 5,000 here yeah 500 coupons $10 each so equal to 5,000 deductible or non-deductible you said deductible why is deductible yeah it's an expense yes okay yes as we as we learned before related with meet three conditions I think they don't mention about promotion, marketing and promotion expense is in nature, I believe it deductible. Okay. But the problem is they said coupon gift. If you say the word gift and the tax law, if you look at the, the non-deductible expense, gift, any kinds of gift and donations is not deductible. Right? Donation, gift. I know every expense is used for business. That's why we have tax law. Okay, again, run through this at home. I mean the lecture note, right? You have. So if you are here, you say coupon gift. If you provide as a gift, even though you call promotion and marketing or promotion, gift is not deductible. Even the nature of expense, I totally agree with you. It is really related to the business. But tax law is tax law. Sometimes it's nonsense. So 8 back 5,000. Okay. To me, it's to me, I based on natures mainly and the trade condition. But if you want to claim a deduction, if you do promotion in a different way, let's say if you spend 5,000 on, promotion, pay to the TV stations, radio station to promote your product, it's fine. It's deductible. Or maybe you spend 5,000 printing like a brochure and then hand out to the customer, it's deductible. But if you spend 5,000 as a marketing promotion by giving coupon like this or any kind of gift, when they come to buy your product with certain amounts, and then you give them some additional products or a gift, this gift is not deductible based on law currently. Yeah. So this is based on currently, if you say give, it's not deductible. Okay, but in practice, I've also facing this issue. I try to advocate by saying, hey, this is really important for the business based on the current economic condition, market condition, very competitive. Look at banks. I believe everyone know, right? Bank also do promotion. Okay, if you place a deposit, like a fixed deposit 6 months up to from 5,000 up, you will get a gift. Like iPhone, some bank they provide iPhone, some bank you will get like a lucky draw, like Lexus 570, right? It's a kind of gift, right? Okay, I assisting a few banks, trying to claim, they say this law is not applicable now based on the current economic condition and market conditions. Yeah. So then I won the case. Took me 2 years. So the argument that I have is that I go back to the natures of expense. Say, hey, based on this market now, very competitive. Everyone do this. If I don't do this, no one going to come to my banks and make a deposit. If I don't get a deposit, I don't make money. Bank need money because they have to lend. They need money to lend out. If they don't have loan, they don't have money to lend out. They don't make income. Yeah, the deposit is the cheapest, cheapest money that the bank have. Because if you loan from overseas, very expensive. If you get a deposit, the interest is very low, maximum 4% a year. Yeah, some bank will offer more than it, 6% a year. It's low. If you borrow from overseas, the interest at least 8%. Very expensive. So based on that particular industry, then combined together, I won the case. Okay. And now they're going to change the law. Yeah. Say, oh yeah, maybe this kind of thing that you call promotions and marketing, if you can explain that expense is really needed for your business, it's deductible. Even though you call whatever coupon gift, whatever gift, kinds of gift. But the gift you provide is not, sorry, the gift you provide is have a condition. It's related to sale. Why I can win the case? Because it's related to income generations, right? If I give the gift, the customer will not deposit with other bank, will deposit with my bank. Yeah. And I get money, I can lend out, I get interest income. So you see, they're related. But if the gift that you provide is not related, you say, oh, okay, you don't really do any promotion, no condition. You just want to give away, some gift without setting a condition and try to explain that the gift that you provide actually will generate the income. I agree. It's, it is a gift, right? If you're talking about a gift in nature, it's really no condition, right? Like a birthday gift. Birthday gift. Yeah, without you just have a birthday. Everyone have a birthday, but not everyone go in to get a gift. And you give a birthday. When the person who give a birthday gift to you, do they expect any money or any income from that gift? No, right? Yeah, and that's why this kind of gift is not deductible. Okay, I also I agree, but sometimes the name is the same. The tax department here, they only focus on the name. Okay, now it seems like the time is 9 o'clock already. Okay, so Monday we will continue to work on this TOI, and I will do it slowly. For this one, we will have one more question, but we will go faster because now you know how to do it. Yeah, and all question is similar, 80%, 80 to 90% same. It just change trading or maybe service companies. Yeah. So if you're familiar with this one and you can do this, then next one will be easy. Okay. Try to work on it at home. Okay. Maybe today or tomorrow. Okay. See you all again Monday next week. Lâu lan trong thơ với bạn với nhau chẳng ai một riêng với bạn. Okay. Hả? Và này trong lụa về đáy bên đây tôi mẹ làm là đài về cái đang lụa nó tình mày phải chi phí du đó tôi mẹ làm thế anh nát với số kết khối cho chưa là vậy tại ở tận đây trên đây coi kết màn này coi kết du về xa khối màn xem không coi về xa coi về chặt về đấy hả